Mr. S.L. Bansal, Chairman and Managing Director of Oriental Bank of Commerce, now joins us. Mr. Bansal, out of the 3-4 measures which have been announced by the new governor about 48 hours ago, which is the most important one?
The most important, I think the RBI governor is trying to adjust two things simultaneously. Number one, improving the inflow of the dollar so that the value of the rupee can be calmed and the volatility in that can be removed. And number two, the cost of deposit for the bank can be addressed. So ultimately, both these steps will go a long way in having a soothing effect on the market and economy.
Mr. Bansal, RBI has also allowed banks to swap fresh FCNR dollar funds above 3 years. Does this move meaningfully help to hedge the currency risk, and will you be looking to grow your FCNR deposit base?
You see, it helps banks in the sense that as on date, I am permitted to raise this deposit at a LIBOR plus 400 basis points. So effectively, my cost comes to 4.78, 4.80. Now RBI is ready to provide a swap line to me at 3.50. So I saved close to 1.30. That's a welcome sign. So my cost comes down, and naturally I'll be encouraged to mobilize more deposits.
Mr. Bansal, banks have to follow a minimum SLR norm when it comes to government securities. The Reserve Bank of India governor has hinted that he could rework that definition. If the SLR requirement for government-owned securities is brought down significantly, will that be a big relief?
See, because even as on date, we are mandated to buy only 23% of the securities, but most of the banks are sitting on 27-28% because the credit opportunities are not available. But in a growing economy, once the economy gets a boost and the credit requirement goes up, then it will help. But not immediately, say in 14 to 16 months, it is not going to help. Maybe FY 15 onwards, may it help. But as on date, not much of credit demand. Most of the banks are sitting on surplus SLR.
Do you think in the short term, when I say short term, 2 quarters, 3 quarters, we will have more pain in the banking system? NPAs will only go up, credit will take a hit, and there is no way we are close to an economic bottom?
See, because ultimately what we have been discussing is the health of the economy is reflected in the balance sheet of the bank, because in most of the projects 75 to 80% of the money belongs to the bank. And if the economy is not doing well, you cannot expect to shine. And naturally this pain is reflected. Most of the accounts finds a place in one of the balance sheet of the banks, and most of the infra projects are in the balance sheet of 7 to 8 banks. So ultimately this pain is to be felt. Now, going forward, what is the option? Now, people talk about disposing of the collaterals. In road project, what type of collaterals are there? How can you dispose it of? Similarly, in power projects, when the COD is struck, what you can do? Land has got minimal value. Equipment, everybody wants to go for new equipment because as on date, the refinancing of the old equipment will be a big question mark. And then signing of FSA and other things. So all these things come in the way. Of course, in a limited way, the change of management, which we are talking aggressively nowadays, can help in some ways, but no change of management in new condition is possible unless the shares are pledged more than 51% with the bank, and some inclination on the part of existing management is also there, and they willingly support the banks.
Mr. Bansal, the RBI has said that it is going to emphasize on transparency, predictability, and also the primary role is going to be monetary stability. How do you read into the governor's speech, and do you think he may take a while to focus on growth, and that immediate need of the hour is going to be currency and inflationary expectations?
No, you are right. See, ultimately in the long run, if there is no growth, then how you are going to deal with the inflation? Inflation is a subject of demand and supply. Now, unless there is a growth, you cannot have a wider horizon on the supply management. So RBI governor is right, and he is a well-informed person as far as international economics is concerned. The market has welcomed him. Now, going forward, I think he will announce a lot more new steps which will bring stability to the market.
How bad do you think it will get for OBC's credit growth before it will get better?
See, It's not a question of especially OBC. Now, whatever opportunities are available, some banks are aggressively refinancing and they are taking over loans from one bank and then they are bulging their balance sheet. My advice to my colleague is that this time is bad. Let us not run for refinancing of the loans, because as it is, most of the balance sheets are not very healthy. Everybody is showing decline in profit, the leverage ratios are high, the equity ratio is not comfortable level. So I believe that market credit is likely to grow by close to 13-14%, and we will be in line with the market. We are not trying to put any aggression in this area.
As a percentage of your total loan book, how much is exposed to infra, and how are you planning to deal with that?
Yeah, our infra loan is close to 20%, and in large number of cases COD have been achieved, but of course, like any other bank, few cases are there where COD is to be achieved, some signing of FSA is there. The initiative by Honorable Finance Minister for setting up a separate cell in the Cabinet Secretariat has started yielding result. I think close to 15 for projects FSA will be signed soon, although the last date was 31st of August. But in most of the cases, things have been lined up. I think in coming days, these FSA will be signed, and I can see that sunlight will be there after 2 months.
Mr. Bansal, what other regulatory changes are you expecting from the new RBI governor? Do you think the central bank will give any relaxation in provisioning for NPAs or restructured assets, given the asset quality stress?
I see this relaxation on restructuring, provisioning norms will not weigh much for the banks, because overall the international investors, they know what is the real picture. But RBI has taken few steps on 15th of July, which has increased the cost of a sudden by 200 basis points. So I am requesting Reserve Bank of India to have a relook at those steps and try to moderate the cost, because ultimately this cost is going to be translated into the higher rate of interest for the borrower, which will further bring pain to the economy.
Well, I'm afraid that today's interaction is not very inspiring. Are you clearly telling me that you are in a spot of bother, your balance sheet will remain under stress and things will not improve for next 2 or 3 quarters?
I'm not talking about OBC only. See, what you will appreciate, economy has grown only 4.4% last quarter. Now going forward, there will be a slow and gradual growth, and everybody is expecting that the economy will grow close to 5% this year and maybe 5.6% next year. So naturally the balance sheet of the banks will be showing a growth of overall close to 13-14%, and that's a fair growth, I think.